After Friday's publication of June's non-farm payrolls, the dollar ended up falling from multi-month highs. We will explain why and project how the week is likely to play out for traders. This is the ActivTrades Weekly Outlook, where every Monday we analyze the economic calendar and identify key events, focusing on how they may impact the markets. Stay with us over the next few minutes while I look into how the week is likely to unfold. I will cover a range of topics, including the ongoing disagreements between OPEC Plus members regarding production quotas. We will also anticipate the release of Eurozone retail sales and the publication of the FOMC meeting minutes. The price of oil has been climbing, with the barrel of crude reaching levels not seen since 2018, threatening to break through the $77 resistance, which would take the cost of the black gold to heights not seen for 7 years. Combination of factors is behind the spike in price. Increase in demand, as economic activity returns to normal levels with the unwinding of lockdowns, and we can also blame diminishing stocks and disinvestment in shale extraction. And finally, an unusual cohesion amongst OPEC member states, who, for once, have been respecting the self-imposed limits on production. Last week, the Organization of Oil Producers failed to reach an agreement that many had expected would add about 500,000 daily barrels of supply to the market. It appears that some nations are unwilling to increase output, with the objective of driving prices even higher. Observers estimate that if supply doesn't increase soon, prices are likely to continue to rise, with some highlighting the risk of $100 per barrel being reached, which would have a multiplying effect on inflation and damage the economic recovery. So, we shall stay alert to developments on this front over the coming week. On Tuesday, the Eurostat will publish the Eurozone retail figures for the month of May. The analyst consensus points at a growth of 7.9% comparatively to the same period of last year. If confirmed, it will represent a deceleration comparatively to the previous reading for the month of April, which was of 23.9%. FX traders in particular will be looking at this number, as it will give an indication of how the economic activity is rebounding in the continent, as life returns to some normality following the acceleration of the vaccination programs. As we saw last week, inflation is nowhere near as much of a problem in Europe as it is on the other side of the Atlantic, with the Eurozone's annualized CPI reading at a mere 1.9%. This discrepancy may, in the medium term, offer support to the dollar and penalize the single currency. So, good news on the retail sales front may, at least in the short term, offer some respite to the euro. We'll end our weekly preview by zooming in on the publication of the minutes for the Federal Reserve's Monetary Policy Committee June meeting. What happened during that meeting, a dramatic change to a more hawkish stance, has been the subject of many discussions, with central bank officials speaking in public since then, and two different views emerging. Some members of the committee, including the chairman Jerome Powell, have tried to water down the shift to bring forward the timing of the tapering, while others stood by the new hawkish stance, highlighting the dangers of inflation. Some even went as far as alluding to the possibility of rate hikes next year. The minutes of the meeting will provide more details on the discussions and may offer further clues on how the Fed is likely to behave over the coming months. As we saw last Friday, after the publication of June's non-farm payrolls, the devil is in the detail. Despite better-than-expected job creation figures, the dollar lost support, as more granular data revealed weaknesses in the labor market. These minutes will provide more such details and offer FX traders a nuanced view over the Fed's intentions and, subsequently, influence the performance of the greenback. This is all for today. We will be back next Monday for another weekly preview. In the meantime, please go to ActivTrades.com for more market analysis. Do subscribe to our channel so we can keep you updated with the latest in the markets, and don't forget to click the like button if you enjoyed the video. Thank you very much for watching.